Hey guys, doing here again from DRFX Forex Swing Trading. New Zealand dollar might present us with a trading opportunity in the next couple of hours, around 12 hours from now. So I'm gonna take a look at what we could do to take advantage of that. Now, as you can see on the daily chart here, the pair has been moving in a clear range pattern over the last several weeks. Support has been formed at 83.11 with a resistance at 84.78. So we're talking about a distance of about 160, a little over 160. So that could present a trading opportunity as we trade between these barriers of resistance and support. Now, for the most part, the currency has been what I would call well behaved. There have not been really any spikes above the resistance or support, such as the one that took place here with the safe haven activity in relation to Greece. But so in the absence of that, in the absence of spikes at the resistance or support boundary, it's usually a good indication that the trading between the boundaries of resistance and support can be done with very little volatility and very little risk to your trading. Now, there are several techniques that people use to trade in between these boundaries. One of them is to use candlestick formations on the lower chart. This could be the 4-hour chart or whichever the lower chart that you might prefer to trade. Now, if you are to choose the 4-hour chart, one of the ways that you could have done this is to have placed an entry order at the area to which the market was expected to rally, at this area, and then place a stop loss above at a reasonable distance, and then place your limit order to capture the targeted number of pips just above, ideally just above the support. You can target it to actually hit the support, but probably a good idea to exit just above the support boundary. So that is one way that one could have taken it. That is one way that one can take advantage of these situations. So you basically estimate where the market will pull back to. You could set the entry order just inside of the boundary and then comfortably above or beyond the boundary, and then set it to a very strong limit order to capture a very large number of pips. So that is one way to take advantage of this movement. Another way is to actually use candlestick formations, which can give you an added confirmation that the market is headed towards the other side of the boundary. But the problem with candlestick formation sometimes is that they can be a little bit late to the party in terms of being able to take advantage of the movement. So as you can see here, by the time this candle closed, we were almost halfway towards the boundary already. So this would have meant sacrificing around 68, around 70 pips of this potential profit. So if you had entered here, you would have gained that advantage of not having to wait until the market presented this candlestick formation. The next thing, so you would have been able to capture from an entry order at 84.65 to a limit order of 83.25. That is around 130 pips. 60, 25, 140 pips rather. So you'd have gained this in a very short time, because as you'd see here, the market doesn't really waste that much time in moving from resistance to support. So you're talking about a day or two in terms of the time that it took to move towards the boundary. So these types of movement offer a large number of pips in a very short period of time. So that is one way you can take advantage of them, by using the entry orders at the boundary, and then placing a stop loss at a distance that is comfortable enough to take advantage of, or to accommodate any unusual spike. But the assumption is that if the market is going to be headed towards the other boundary, you're not going to have that many spikes to take out your stop. I believe that once that takes place, then it's an indication that the market is going to break out, or as you'll see here, that is now taking place. It's either an indication that the market is going to break out higher, or is about to U-turn and create what is called a false breakout. So similar to what took place here when the market appeared as if it was going to head bullish and then sharply U-turn to head back inside of the consolidation. So this is what we could actually see take place here. Instead of a breakout, the market could actually head back down and come back to support. So I'm going to be taking a look at what could be done to take advantage of that potential reversal. Now, obviously, this technique of using the entry order and the stop loss at the boundary would not be feasible. Perhaps somebody who already has put in place an entry order and their stop loss at this area would still be in the trade. But now that we are seeing, if you're not in the trade, then this is basically what you'll be looking at. So if you are in the trade, perhaps you would not be looking at the chart right now. You just be waiting until the market either takes out your stop loss or goes to the target. But right now, for those persons who are not in this trade, like myself, I'll be basically looking to see how I could take advantage of that possible reversal. Now, one of the ways in which the market can move from resistance to support is obviously with setups and candlestick formations. So with a situation like this, in which using an entry order at the resistance boundary is not going to work, the next opportunity to take advantage of the movement is to use a candlestick formation. So right now, as you can see, there's a trend line in place when the market created this new high. So if the market is gonna head back down here, then it's gonna break this trend line. So the question now is, what type of signal would indicate that we're actually going to be heading back towards this area? A simple break of this trend line is not enough. The candle supported by the setup has to be strong enough to support the trade. As you'll see from my methodology, it is very important that the setup and the signals be in sync and be strong enough. If they're not strong enough, then the trade has a very low probability of actually working out. So at this area here that we're going to be looking at in terms of the 4-hour chart, the setup and the signal has to be very strong. So I'm going to wait to see what appears here and then trade it based on what I'm seeing. If it is very strong and it has a high probability of actually leading to a move back to support. So until then, take care.